Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. Today's Saturday, October 26th, 2019, midday. Hope you guys are enjoying your weekend. As usual, let's continue with our weekly analysis. Let's start with the Spider, Qs, Diamond, Russell's, Banks, and the Semi here. Let's talk about this right here. We've been tracking this rising pivot, right? So it's been acting as resistance here pretty much last few years, as you can see here, and sooner or later we will break out of that and the market is going to get into strong uptrend. We've been just kind of consolidating. I think we established the fact that like on the last video, I think last week's video, that well, we see what 25% move in the market in just 3 to 4 months. It will be crazy to think that it's going to continue higher, right? It's crazy to think that the market is not going to see this consolidation, right? People think that it's crazy that you know what I mean, that market isn't going to crash, or it's crazy to think that with these kind of declines, market is acting crazy. No. This is definitely normal behavior. That's what I mean. Like, market isn't crazy. Market will definitely, and we talked about this last week. Market is crazy. Market will be. I would say market is crazy if we would have never seen anything like this, and market just kept going high and kept. I would say market is definitely crazy then. But after seeing just straight up move, from the lows of December, and then consolidating and subtly cultivating higher lows, right, in process, I don't think the market is crazy at all. And I think this is a very, very much normal behavior. When the market sees that kind of move that fast, it needs to kind of hang around a little bit, gather itself again, digest its gain, and before to run again, right? If you run a big sprint, you probably need to gather your breath again. So totally normal behavior, and I think everybody's still, I think, people are thinking that this must be some kind of a massive triple top or something like that. And I've been saying pretty much since May that it's not going to be a triple top. We're probably going to hang around here. We're probably going to see some, consolidations here. But once we break out, you will see 320 and 340, and 320 is still my target end of this year. So let's kind of zoom in and see how how the market played out this week. As you can see, we actually filled this down gap. That was pretty much the only down gap we saw, and I think that happened is not because the market was down. That was like a dividend gap. So I don't know. It doesn't really count, but nonetheless that was a gap down. So now that gap has been filled. There's no longer downside gap. All the downside gap has been filled, but we have all these up gaps that has been open. We got this gap still open, we got that gap still open, we got this gap still open, we got that little gap still open, we got all these up gaps still open. We talked about this rising support. We briefly broke below it. Dips were bought and then came down, made a higher low, and just got right back up here. So we're back at these levels, 300. This psychological level, obviously, because the last few times we hit that tank. So there will be another kind of a, anticipation here. Are we going to tank again like we saw in October and August? Or are we going to break out this time, right? That will be the question. Obviously, nobody truly 100% knows, how the market is going to do, how the market is going to go from here, because none of us can see the future. But based on what I've been seeing just last 3 months, this entirety of this year, looking at the long-term chart, everything else, I believe that we are going to break out this time around. We're not going to see something like that again. When now we're hitting here. Doesn't mean we're not going to see a short-term pullback, potentially retest 297, maybe even 295, maybe even come back down. I think worst case scenario, maybe even retest that fill this gap right here. I don't believe this thing will come all the way down though. Maybe to 280s. I don't believe that. I think the worst case scenario would possibly be coming down somewhere here, maybe even retesting this, you know, support. I'm kind of leaning towards not seeing that, or like I don't think that's gonna happen, but you know, market just knows how to pull shenanigan, right? So if we do see a shenanigan, we may have to even come down here. But I think this time around we may consolidate. I think going to next week though, I think it'll be kind of fit. Either we see a just big thrust to the upside, right? Or we're gonna consolidate, something like that, or a little pullback or pause before this thing run again. So I'll tweet things out next week, what I see. You can follow me at 2KKim on Twitter. Like throughout the week, I share charts and things like that. Not every day, but when I deem necessary, I do. And show you some sentiment of how the market is doing and things like that. So you can watch out for that. But for now, let's watch this rising pivot so we can finally break out. Again, I wouldn't like be obsessive with pennies around this area, because he could very well poke his head a little bit and then come right back down. There could be some up and down stuff, but I think ultimately though, this pivot is going to be important. I'm going to call it a pivot because sooner or later I believe that it's going to become a support. That's why I'm calling it a pivot, and then it's going to be for the next leg run higher. So let's continue to watch this, see how it deals with it going into next week. The sentiment is bullish in the minor, intermediate, and primary terms. Sentiment is bullish. Trend is bullish. Yes, next 5 months or last 5 months or so, we haven't gone anywhere. But that's how the market is going to behave when it sees 20-25% move in just 4 months, right? It's going to have to digest its gain. It's going to have to slow down a bit. It will be crazy to think it's going to go to 30, 40, 50% without even slowing it down, right? Let's go to Qs. So Qs, we got the same level right here. So you can see this level. So that's the level to watch, right? Recently we cleared that resistance. We're seeing the thrust, but that would be, let's kind of zoom in here a little bit and do a little bit of maintenance. You got this little gap still open. So that gap is open. This gap is open. So we got 3 gaps open here, right? We got 3 gaps open. No gap open for the bears. And I can also do, you know what? Let's do that. And then I'll give you 194, 191. You know, the minor term supports. Should the price pull back next week? But look at that Maru Bozu candle. Very, very much shaved. Right, it's a shaved candle there. So strong. We gapped down initially, thrust to the upside, breaking pretty strong support here that we've been hanging on. So initially what we see is when you look at this in the more of a minor term perspective here, we actually cultivated higher high, and potentially looks like this is a double bottom and this is a neckline and breaking above that, right? What is downtrend? It's lower highs and lower lows. We did have that lower high, but we never had lower low, because that high is definitely, this high is definitely higher than this high. So at a lower high, higher low, and then now that is not even lower high anymore. So we can't even say that we're still downtrend the short term. We're actually in an uptrend, because this neckline became so you can look at this high, higher high, and we got another higher high, and with these higher, subtle higher lows here. So looking bullish in the minor term. We could have a short-term pullback and things like that, but I think you know, I believe that the pressure, the short-term, you know, that the buying pressure that we've seen last several weeks, I think it's going to continue. So, but this is the level to watch here. Let's get to about 190, 200 or so. Let's go to diamond. There's the same level here in the diamond. It's that level, right? It's this right here, right there. So that's where been hitting, right? Again, I forecast that we're gonna break out of this year. I believe that we're going to break out of this year. Diamond's been lagging. So you can see how diamond is 15% year to date, while the S&P 20, NASDAQ 25, diamond, and Russell, they're both lagging. But banks were lagging also, but it caught up. Banks is actually close to S&P now. Remember, banks were like, I remember when S&P was 20, banks were like 12, 13. Do you remember that? And we're talking about how banks is going to catch up. Banks already caught up. Now, I think the Russell is going to catch up. And out of these bank stocks been doing well. I actually own all the bank stocks in my portfolio. We're talking Goldman Sachs, Wells Fargo, Bank of America, Citigroup, JP Morgan, Morgan Stanley, Capital One. I own all the bank stocks, and I've been buying the dip since pretty much all throughout this year. I bought the dip in December low. I bought the dip in June lows, August lows, October lows, but also recently been buying those bank stocks as well. But anyway, so you can see we got that gap. We're testing the gap here on the diamond, and the diamond just been consolidating. It's a nice 2-year consolidation, right? I think this is a nice rest before continuation, before resuming with this primary term uptrend. And when I say primary term uptrend, I mean primary. I mean the longer term chart, because that's how the market is going to move, right? Because every time we see a steep decline, like something like this, something like that, there's always talk of a crash. But you can see we haven't seen crash since 2008, and we're probably not going to see crash anytime soon. A lot of people forecasting that we're going to see a crash in 2020. We're going to have a huge year in 2020. We already having pretty nice year this year. Despite the fact that we had steep decline late December. We're having a good year, because you think you see about 20% decline, the market is just going to be very, very choppy. It's going to be difficult market, lots up and down, consolidating, shenanigan up and down. I don't think anybody thought that we're going to be hitting the new all-time highs. I mean, especially like 4 months later. No, nobody did. And I think whole Wall Street is shocked at this point. But it's been consolidating, grinding, because there's still a talk about market is going to crash. This is going to come back down to retest lows or something like that. But I believe that we're going to break out, and it's going to do well towards the end of this year. Russell 2000 still in this consolidating mode, very, very much, underperforming, lagging, lethargic. We're nowhere near all-time highs yet, but I believe Russell 2000 is also going to catch up to these large indices and probably get there at least towards the end of this year, something like that. We're probably going to get there. That number is probably going to get maybe not as close to S&P, but maybe we'll get to 18, 17 when S&P 20, and then continue higher. I think S&P could do 25 towards the end of this year, 25, 26. Then Russell could do 22, 23. Banks pretty close, I think. And NASDAQ could do 30, 32. And semis, man, up 40% year to date. It's crazy. I let you guys, I told you guys that down here back in late December, I was buying these triple shares, and the semiconductor triple shares is up 150%. The entry here, I mean, I bought these dips here, and here, and I added a little more there. So I've been buying these dips on SOXL. Those are triple shares. I have triple shares on everything. SPXL, TQQQ, UDAO, TNA, which is Russell 2000. I got FOS, FAS, financials, and then SOXL. And you guys know that I also have some calls on TQQQ. I know I haven't written journal on that for a while. Maybe I'll start next week. And the market has been just choppy. Sometimes, you don't want to overanalyze things. When markets start just going up and down like that, stop overanalyzing. Just kind of let the market sort things out. So, let's add a little bit. It will be kind of an update, since I do have a journal post. So you guys know that I'm long since like 54 and stuff, right? So I'm with calls 54, something like that, and just a lot of up and downs. A lot of choppiness, and you can see like a lot of up and down. And at some point, you just kind of like, okay, let's just kind of let market sort things out. And I'm holding all of it. I'm still holding all of my calls, and they're green now. But you can see you're breaking out of this now. See if you can hold that level on the TQQQ. But I also have a shares on TQQ that I've been accumulating here. Recently bought more. So because as the indices, as I'm bullish in the market, these triple shares gonna perform well You can see TQQQ up 80% year to date. Also semis or SOXL is up 122%. Yeah, buying. Yeah, they came down hard on some of these ones. You can see they came down hard on these ones. So those were opportunities, not that, you know, not to be like scared about it, because at one point it went like 200%, and then still is doing really, really well, 195 or something like that. And then I bought these, I bought that, I bought here, added some here. So normally, you know, you see what happened was I normally wouldn't trade these triple shares. This is a kind of first time I was getting into it. The reason was because when I saw that 20% decline in late December, this was it. When I saw this, I just saw the opportunity, and this was a perfect time, because with this kind of dip, I could accumulate triple shares on these indices, and obviously with the triple share there is no expiration date, so I could hold for long term. Like I could hold for, you know, I wouldn't hold like several years, but I would hold 1 to 2 years and trying to get the maximum amount of, you know, like, well, let's go to, where am I here? Let's go to, I guess I don't have monthly, but in here I gotta put monthly there. But so this is SOXL, you know, like if you bought it somewhere here in that, and if you held it about 2 years or so, year or two, that's about 688%. Doesn't mean like you want to capture everything. Even if you capture 300, 400%, that's a great gain. That's a great gain. So like, if I can capture, I'm actually been buying down here, so even if I can capture some of that and been buying here and here and here, that's a great gain. That's a great gain. And you know, if market decided that we're gonna like really consolidate for long, because sometimes market can consolidate for like 1 year or something before it actually moves, then I can continue to hold and then start to buy the dip. So I thought instead of buying call options, you know, because I can buy leaves on call options, you have like a year maybe so, but sometimes market could just grind for so long just in case. Because you know after the 20% decline, I wasn't sure. Like I had a good idea, and I mentioned this on January, and there's a video for that. I said we're gonna go straight up. Remember I talked about that. I was pretty sure that we're gonna have there's a good chance we're gonna have a straight up, but also I could be wrong about that, where market could possibly don't go straight up and just start to grind and sideways for entirety of this year. We've seen something like that before. So triple shares were perfect because I wanted to buy this, but I just wasn't 100% sure we're gonna go straight up, because we never done that. After 20% decline, never. You go back and check your chart. We've never seen V shape and went all the way back to the all-time high. If you can find something like double top, triple top, inverted head and shoulders, consolidation before going higher. You will never see. I'm talking 20% decline. You go back. You wanna prove me wrong? Go look at your chart. Go back to go through all the charts on the index, not on the stock, but index. You know, and find 20% decline from the peak, okay, and where we saw a straight up move and went to new all-time high in about a quarter, a little over a quarter. It has never happened, but I kind of, you know, I came to a conclusion that it might happen, had a high probability of happening, right? That's why there was a video that I did in January. I showed you guys before that it's gonna go straight up, right? But I was like, yeah, we could, but just at this point, when this was doing this, like we're here, like down here, like this. I'm like, okay, I'm like, okay, we might. So I think the best instrument for me was, obviously I was accumulating stocks too on equities, shares of individual companies. But for me to invest in these indices was, I came to conclusion of triple shares. So I started accumulating triple shares down there. I did buy TQQQ calls also, but mostly all triple shares. That way I can have to hold, and if we do see like long drawn out, you know, you know, consolidation, I can hold through them, maybe accumulate some and wait for a breakout. So that was a plan there, but it worked out well because market obviously just kind of went straight up, you know. So then TQQQ, I think from the lows, it's about 120 some percent. As you can see, 122. Well, from the lows, these are year to date. So, but the move hasn't even started yet, right? So some of these index actual, you know, because the market moves in these cycles and phases, right? So you see how if I go back like this, you know, if I go back like this, you can see you get that move, run, get a pull back, and then a move, pull back, and then a move, right? And then a pull back, and then a move. We haven't seen that move yet. So I think this is where bull and bear comes. Bull think that we're gonna see a next move. Bears think that it's gonna crash, right? And then there are cash people kind of waiting, right? So we don't have that public participation phase yet. If you look at this as, if you don't look at this as accumulation phase right here, like below these levels, if you look at that as accumulation phase, right? This is accumulation phase after distribution phase. This was a distribution phase after long drawn out move, and then we get back into a public participation, right? So now when the market gets higher, everybody gets hyped up. Think about this though. Most retail traders are not gonna be buying down here because they're scared. If anything, they're gonna be closing out their positions down here and they're gonna wait it out. So then they're waiting it out. Maybe they're gonna wait until this thing breaks out. Nowadays, everybody got this little charting software they look at. It's all free. So they might draw a little line like this, and then they're gonna say, I wanna wait until it breaks out of that. And then they'll start maybe going long, right? And then we may see some shenanigans because of that, because the market likes to punish chasers. But if they hold through, you know, finally this thing breaks out, get into an uptrend, that's what you call public part. And then now the panic buying starting. People who, the bears are now buying. The bulls, you know, they're keep holding, maybe buying more, and then the cash people start getting into it. So now panic buying occurring, and then that's where you're gonna see that big move where we saw in 2017, right? And you guys know that I was bullish here, I was buying that, I was buying this, I was buying all throughout that. So you can see that's kind of what happened here. If you look at that, like this, that was that there. We retest that pivot, right? So this isn't a rising, this is what I was saying. Like we had a falling pivot in 2016 that retested it, and then we got into the second gear. We have rising pivot this time, not a falling pivot, and then come down and then go. So you can see, right? History does not rhyme. History does not repeat. It rhymes. So with that falling pivot, right? And I bought that. You guys remember if you follow me that long, and when finally cleared it, right? So basically everybody wanted to. So this we got that one last. What happened is 2016. So the one that was, you know, we cleared that right there, all time high. And then people chased it, right? People who close out their position down here, they waited out until it makes new all-time high, and a lot of people chased it. And market is going to punish those chasers, right? Market is going to punish those chasers, and if they held through it, that's good. But what market did was it actually broke below. Oh my God! Sorry about my phone is out of my reach, but I forgot to mute it. Below it, so now people thought, aha, that was fake breakout before this thing going to 180. Well, it wasn't, and you can see that it did that. But if you drawn it, actually, if you drawn it this, oh my God, what? Stop. Oh, sorry about that. Okay, so that's what happened, and then so that's what something like this is gonna happen where people want to chase this. Market is going to do one last punish for those chasing, you know, thinking that we're going to just completely break out. And then market gets a huge move, and you can see that's a public participation and panic buying. And then here, we're here. So sooner or later, we're going to have a breakout and could be a punish before going higher. But understand this though, sometimes there's a retest, sometimes there isn't. Nobody knows that. Sometimes this thing sometimes we get clean breakout where it breaks out, we may get a little pullback and continue higher. Sometimes it goes up, comes down, and everybody's gonna, like I said, don't be so obsessive to the pennies on this line, because just like here, right, like that, it broken below it if you drawn it that way. So what could happen is this thing breaks out initially 310, comes down, and then break below 297, 300, thinking this is up. That's a big head fake. This thing is going to 260 now, and finally run. So I'm giving you just different scenarios so you get to understand, you know, when we get there, right? I didn't mean to go this long, but it happened. And I'm glad that I was able to share that with you. You guys have a wonderful weekend and good luck trading next week.